What's going on, everyone? My name is Kenneth Beard here with Stock Indices, where I go over economic data reports and I go over technical analysis, and I put that all together to make an assumption so you can all have money-making trades. So, I haven't made a video in a couple days. It's been about 3 days. I was seeing some family, and so I wasn't able to, get to the charts and make a video. But a lot of stuff has happened since I have been gone as far as the overall markets. So it'll be interesting to really break this down for you all, because a lot of assumptions that I've made previously have actually happened since I've been gone here. So yeah, I'm gonna break that all down for you all. And before this video begins, leave a like, comment, and subscribe. I make these videos every single day, Monday to Friday, unless something important like seeing family or I get sick or something like that comes up. Other than that, I usually make these videos every single day. So let's hop straight into this. Today is Thursday, November 4th, and we have some pretty decent jobless claims reports coming in. Here we have the initial jobless claims coming in previously at 283,000. The median forecast was 275,000. The actual was 269,000. So dropping on the initial jobless claims numbers. For the continuous jobless claims, we had 2.24 million. Previously at 2.11 million. Take that back. It was 2.24 million, dropping down to 2.11 million. So seeing a large decrease in that number as well. We had the international trade deficit come in at negative 72.8 billion. Was expected to be around 810 billion. Came in at negative 80.9 billion. So right in between, almost right in between for the international trade deficit. For productivity, we had previously at 2.4%. Was expected to be around negative 3.2%. Came in at negative 5.0%. So, dropping for the productivity numbers, for unit labor cost, we're at 1.1%. Median forecast was 7.4%. And came in at 8.3% there for unit labor costs. So seeing a slight increase in that number. So in the productivity numbers and trade deficit numbers, kind of the same thing. We're seeing decreases by a large, by a large margin for those. And then for the productivity, we're seeing an increase. And I mean, not productivity, but unit labor costs, we're seeing a nice increase for that number. So that's all. Still seeing those lower initial jobless claim numbers. Those are, showing us that, okay, yeah, the lower initial jobless claims numbers are indicating to us more people are, going back to work, and we're seeing that slight recovery in the economy, which is good. So let's hop straight into these charts. First thing that I'm gonna be looking at is volatility. So volatility, seen a slight rise today in volatility. Let's move my head out the way. Sorry, I gotta move myself. So we're seeing a slight rise in volatility here. We're right at this support level down here, and we're seeing, that was kind of the low where volatility was, and the low where it has been for quite some time. So, we dropped down there, and now we're seeing a little bit of a bounce here. I say whenever volatility is below 20, we're seeing a decently less volatile market. Anytime we get over 20, that's when volatility is starting to go rapid, and we're starting to see more fear in the market. So we're not seeing that right now. Still staying to the lower levels. So as far as volatility goes, not seeing much erraticness or fear in place in the overall markets. And yeah, so heading over to ES here. ES has been uptrending, and I'm suspecting that we're going to see a pullback anytime soon here because you know looking at the RSI indicator, RSI is showing us overbought on the daily. 4 hours showing us overbought. 1 hour showing us overbought, and we actually see a little bit of a divergence here on the 1 hour. So all of these, we're seeing, the lower time frames, we're seeing a little bit of a bearish divergence here. So all of these, the market is strong, and we're seeing healthy uptrends. Alongside with the good economic indicators, with the initial jobless claims report and things of that nature. But we are seeing a support level at volatility, as well as overbought areas, as well as a bearish divergence, as well as being at the valuary high. And so I'm expecting that anytime soon we're going to get a pullback here. Volatility may step back in and pull that market down a bit as we are heading into overextended areas for the overall market. Now, that's not saying you know, that's not saying that it's going to be like another one of these going on where we have this big retracement alongside with high volume and rapid volatility. I don't think we'll get one of those, but definitely something to do with profit taking. And um, so definitely, you know, gonna see some profit taking. Gonna see something here soon as we are headed up into that overextended area for the overall market, the S&P 500. So, you know, that's what I'm really looking out here for. And I had a little bit of trades. It's really hard trying to predict these type of things and see it and trying to kind of catch the move while it's happening because before it happens, take that back, because usually the market, you'll see it be in overbought areas, and I've seen it before, but the market being overbought over sold areas, and it just for days continue to go towards the upside, even though the technicals are showing us otherwise. And so, with that being said, you got to just stay patient. I surely do believe that'll be coming up soon, where we'll get a nice pullback, and before we continue higher, because you know I don't really believe, and I believe it's going to be bigger than just this little pullback that we had here. I'm thinking that for this to continue up into at the higher levels, it needs to get out of these overbought areas, and so that's my assumption. Until I'm proved wrong, if the market goes up another 100 points without seeing a pullback, that's just crazy. Yeah, that'd probably be the first time in history we've ever seen something like that. So, you know, that's kind of what I'm looking out here for. Staying cautious on the long side as well, to just kind of mitigate the risk of being in long positions when we have a pullback like that. Because, like I said, we are in overextended areas. So, next one we're going to be looking at RTY. Now, I spoke about this thing. I speak about it every single day in every single one of my videos, and I talked about how RTY was building up that momentum at this price area. So, I want you guys to look at my volume profile and look at the point of control here. And at this area, kind of in this range where we were just consolidating, chopping sideways for months on end, you can see the buildup of just people just at that price level, the buildup of volume, at this price. And I said, okay, when we're having that buildup of volume for such a long time, once it does break out, it's going to be a very strong breakout, because it's like to the effect of when you have a balloon, right? And you have a pool or water or whatever. You take the balloon and you try to hold the balloon under the water. What is the balloon going to want to do? It's when you let go. When you let go, the balloon's going to want to go up and blast towards the upside. That's kind of the effect that I was saying that we were going to get on the Russell 2000, and the Russell 2000 just proved my point. When we had this big consolidation, I said, okay, people are building up their positions, and they've been doing it for a long time. And now that we have gotten above all the resistance level, we're seeing a very nice strong breakout. And just today is looking like we're seeing some weakness up here. And so I'm guessing, we may see some sideways movement, or may see a bull flag before making a new trend higher. And then I'm thinking, since it was such a long period of consolidation, we have much more room towards the upside to go for the Russell 2000. So that's for RTY. Let's check out bonds here. Bonds look like it's making a nice move towards the upside. We have some previous resistance area up above, looking like, they're making that push higher. Interest rates may be lowering, and when we see lower interest rates, we see, the stock market tend to react well off of that. And with the uptrending markets that we've been seeing, bonds is kind of confirming that uptrend here. So you're seeing the bonds push up about 2 basis points, 2.5 basis points up above today. And so nice thing to look at for the bonds, seeing that push towards the upside, indicating to us that the market is also seeing another confirmation of strength. Looking at the Qs here making a very wild move towards the upside. Also overbought, and we'll be seeing a pullback in that thing for sure, because we have not seen any any red on the NASDAQ for some days now. So nice bullish trend. Stay cautious when you're looking at this thing towards the upside, because we broke out of several key levels, and we're even past the value area high. It doesn't even put in the value area high level yet. It hadn't even calculated one in yet. So this thing has pushed way above its all-time highs, and it's only a matter of time before that support on the VIX starts to kind of kick in, and then we see a pullback. One more that I want to look at. Okay, so the DIA seen some weakness today at the value area high level. Looking like we may pull back, and this looks like it's kind of one of the first ones to see that pullback. And so we broke out the highs, we're moving towards the upside, hit value area high levels, and now seeing some weakness. Looks like we may pull back if we see a close below the high of low day. We could see a miniature pullback before seeing this thing continue higher. Now, out of all the indexes, the DIA looks like it was probably the one to see the least amount of momentum towards the upside above all-time highs. But with that being said, it could still be building up some pressure here to see another large move towards the upside. So even with all the other indexes going sky high, DIA has been the only one not to do that yet, and is the only one that's not in all of these overbought areas in all these different time frames. Daily is not overbought. 4 hours not overbought here, and it hasn't been as rapid. We've been pushing higher, making higher highs, making higher lows, but nothing extreme and no rapid moves towards the upside. Like we've been seeing with the S&P 500 and the Russell 2000 and the NASDAQ. So with this, my assumption is that I will be comfortable still, maybe looking at this from a bullish perspective, and the fact that we've been seeing decent pullbacks already. Giving us the breathing room to say, okay, this thing is not gonna just crash on us because it's seeing a 4% move towards the upside. Something that is kind of abnormal. So that is for the DIA. And I want to go over one stock in particular that I'm just positioned myself in. If I can find it on my list. Here we go. So Google here. Google pushed up after earnings, consolidated sideways a little bit, kind of pulled back towards this 21, and we saw a gap up, and now we're seeing a rise. So I have a long vertical spread here on Google, which I am looking to take the breakout on this thing. I believe my strikes is the 29.70 to 29.85. So have about 8 days out on that. So it's a quick trade. Should net me around $800 profit if the trade works out. My out zone on this is I always use my out zone based on percentages and dollar losses. So my out zone should be about 5 to 10%. So of the trade value. So should be about 5% of my total account that I'm willing to maximum risk on this trade if it does not work out. So I think this is a very high probability trade. We got to push up after earnings here. I even go to a lower time frame. You have to push up after earnings consolidation and a slow gradual movement held up by the 21 EMA right at this breakout level, anticipating the breakout a little bit. That's the only risky thing I'd say is about this trade, is that I'm anticipating the breakout. But with the market being as strong as it is, I'm thinking once it does break out, it'll see a nice move towards the upside. So that's kind of my assumption around this thing. Now, if the market does see some weakness and we pull back with the S&P 500, that may have an impact on this trade, and I may have to mitigate my risk based on that. And so if the market does pull back, the breakout may not be as strong. So I really, that's the only thing about this trade. I don't know how it's going to react. I know Google sometimes does take into perspective. It does move based on the S&P 500, but there are times where Google will kind of still have so much strength because of pure technicals in its singular security that it may not fully take in retrospect to what the S&P 500 is currently doing. So I'm just kind of taking my chances on that and then mitigating my risk upon it. So that's all I got for you guys today. If you guys enjoyed this video, leave a like, comment, and subscribe. I make these videos for you all to have informative information. If you like the type of technical analysis I do, feel free to implement it into your own trading. I've been doing technical analysis for quite some time, so I do know what I'm talking about when it comes to technical analysis. My trades may not always be 100% correct because no trader has 100% accuracy. Matter of fact, you're doing excellent just if you have about 35 to 40% accuracy on each one of your trades, if you can learn how to mitigate that risk as much as possible. So like I said, click that video up in the right corner. That'll lead you to my other videos, and I will see you all in the next one.